Right. So this video is for people who want to join the journey to retire rich and retire young, but are so much into a tight schedule of a 9 to 5 day job where they don't have the time to monitor how the price of the market, price of assets are running on the stock market, and also don't have what it takes to read charts or sit by the computer every day. So I take you through the different types of investors on the stock market and why you are qualified and more than qualified to also invest, even though you have very small time. Now, there are two investors on the stock market, and these categories are passive investors and then active investors. So those who don't have time, but then they have money to invest and then they want to work on their future and they want to retire rich and retire young, they are the people who can go into the stock market and then buy things like ETFs and then funds, anything that they will invest in that can return of a surety return a good percentage of their money every year without them having to involve themselves in looking at what is happening on the stock market.
Income streams, they start to flow. From determination they grow. Build your world with what you do. Financial freedom just for you.
Right. So for passive investors, they go into the stock market and then put their monies into a diversified index. That's a collection of products or instruments that they have put them into an index, or they are buying a collection of shares that they have turned them into an ETF, that is exchange traded fund. And what happens is that these particular instruments require less management, and then because the transactional fees are also very low, the benefit is that these cost very little to manage because the transactional costs are very little. From that, the risk is reduced. Right. So the risk of having to invest into an individual stock, which you may not be able to tell whether it will continue to move upwards, is reduced. Now, for passive investors on the stock market, we have what we call time efficiency, because all that we do is that we are looking at making high return on the long term. And because it is long term, time rewards us. So all that we do is to put the money in there and buy whatever we are buying, and then we leave time to go, and then the investment, we set our portfolio up and just let the portfolio grow. Right. So here we are enjoying lower fees, we are enjoying reduced risk through diversification, and then we are also enjoying the time efficiency because, we just set our portfolio up and all that we are watching it is to watch it grow. Right. So we are looking at the fourth benefit of passive investing, and that one is historically it has been proven that stocks or ETFs, or funds, like you talk about the S&P 500, always return a good percentage. So historically, we've seen a very high percentage when it comes to buying indices and then buying ETFs. Right. Research shows that many passive investments like the S&P 500 tend to outperform the majority of actively managed funds over the long term. So here we have the benefit of enjoying a higher return over time because passive investors have the luxury of time and then to let their money work out well for them. Passive investing helps prevent the impulse to buy or to sell, therefore reducing the risk, to go through the emotional stress that come with it. With active trading or active investing, sometimes you have to be watching the market every now and then to see what is happening, to your investment. Let's say you are actively trading a stock, or you are into an options trade. You want to see where the price gets to and where you can get out and take your profit, or you can, cut your losses short. Right. But when it comes to passive investing, it's just a matter of set it and forget it. And that means that you just set up your portfolio, and then you are gone, and allow the players of the market and time to reward that investment. Yes, and I will add one more, that the benefit of passive investing is the fact that you have passive income coming in, and then you are fully 100% out of the management of that investment. And then another thing is that you can invest your time fully 100% into other ventures that could make you, other streams of income to further invest into passive income investments, where you are reaping all these benefits from the stock market towards your retiring rich and towards your retiring young. So there you have it again. We do not have any excuse as to why we cannot invest to retire rich and retire young. The opportunities are endless. They are diversified and they are endless. And so we have all these at our disposal that we can decide whichever way we want to go. If you don't have time, you want to do passive investing, you can create your account and then start investing passively on the stock market. If you have luxury of time like myself and you want to add active investing to your passive investing, then you can also trade actively, buying and selling of shares, or you are doing options, or you are trading spreads, whichever way it is, to gather more monies where you can inflate your portfolio towards retiring rich and retiring young.
Start with nothing, start today. Learn to hustle, find a way. Brick by brick you build it right, from the morning through the night. Dreams are growing step by step, every fall a future pep. No experience, just a heart, that's the way you got to start.